All right, well, thank you so much for the opportunity to share my work with you guys today. I am really excited to present this work on gender-based price discrimination. This is joint work with my co-author, Sarah Moshari, who used to be at Booth when we were working on this. She's now at Berkeley Haas, and actually a former Kellogg PhD student. Natasha, some of you guys may have had her in your PhD classes many years ago. At the time, her name was Natasha Bhatia, but now her married name is Vajravelu, and she is now an associate at Cornerstone Research. All right, so let's dive into things. Speaking to a room of business school faculty, I'm sure that almost every single one of you have taught your MBA students that segmentation, targeting, and price discrimination are textbook strategies that we encourage firms to use when they're facing markets with heterogeneous demand. However, in recent years, many companies have actually come under fire for applying these textbook practices within a specific context, namely using price discrimination on the basis of gender. One example of the type of scrutiny and pushback that companies have encountered is this Axe the Pink Tax campaign. So just to fix ideas, make sure everyone is on the same page when we refer to this phrase of the pink tax, because it's sometimes used to refer to two different phenomenon. When I refer to the pink tax here, I'm referring to this phrase that has come to refer to the alleged empirical regularity that goods and services that are marketed to women tend to be more expensive than similar counterparts that are marketed to men. And this infographic that we have on the slide up here gives an example of the type of thing people have in mind when they talk about the pink tax, where we see here two razors of different colors, pink and blue, where the pink razor is marketed towards women, the blue razor is targeted towards men, and we see that the pink razor is sold at a more expensive price than the blue razor. Now, this is obviously a stylized infographic, but if you pull out your phone right now and you type pink tax into Google, you will see pictures that many consumers have taken walking the aisles of drugstores or supermarkets, where they show examples that seem very consistent with this type of pricing practice. And for their part, policymakers have seen such examples and have raised concerns that this type of pricing behavior may exacerbate existing disparities across gender lines, both driven from the labor market and other economic disparities. So in a very rare instance of attempted bipartisan legislation, this actually led a group of congresspeople spearheaded by Jackie Speier and Tom Reed, a Republican from New York, to propose legislation at the national level in Congress called the Pink Tax Repeal Act. They first co-sponsored this legislation in 2015, and I believe that they continued to sponsor it for 4 years in a row. And what this Pink Tax Repeal Act aimed to do is it said that it would make it illegal for firms to charge different prices for substantially similar goods or services produced by the same manufacturer that are targeted at different genders. So they're really trying to ban this type of price discrimination that people have in mind when they talk about the pink tax. Now, naturally, you may be wondering when you see this language, well, what does substantially similar products mean? So the words that the legislation uses is they interpret substantially similar to mean products that are produced with similar materials, they have the same intended use, and they have the same functional design features. And importantly, this legislation excludes color as a meaningful source of differentiation. So they explicitly say, like, those razors, if the only difference is that it's pink and blue, that would not count, or those products would count as substantially similar. They are not differentiated because of the color. Okay. Now, this legislation never made it through the full legislative process, and in this current administration, I think it's very unlikely that we will ever see this type of legislation passed at the national level. But in fact, individual state lawmakers have actually picked up the agenda, and in a couple of states, namely New York and California, they've actually passed and enacted similar types of legislation to restrict this kind of price discrimination within their state markets. I also wanted to highlight that this is a topic that is not just a phenomenon or a belief in the United States, but this is an area that has gotten international attention. There have been consumer boycotts in South Korea of female consumers boycotting because of the pink tax. And a few kind of similar time to where there was a big legislative push on this issue in the US, there was also an MP in the UK government that was pushing similar type of legislation. So this is a more global phenomenon or issue. So we wanted to think about, well, if we take a step back, what does the academic literature tell us on the topic that relates to this idea of gender-based price discrimination? And at first blush, this area seems closely related to a large and existing body of work that has documented very clear disparities in terms of the prices that consumers face or perhaps the wages that consumers earn, and differentiation on the basis of gender there. So there's a large literature showing disparities in wages in labor markets. There's also some really nice work looking at differences in prices that consumers pay for automobiles and as well for automobile repairs, including some work carried out by some of our Kellogg colleagues, Megan and Florian. And there's also some work in the real estate area as well. But what we notice is different about the types of context that people often have in mind when they talk about the pink tax, which is often like product markets like this example of razors, or perhaps services like dry cleaning or haircuts, is that all of these sets of papers that we see up here, they all study markets where prices are negotiated. So that means in these negotiated price markets that a consumer that arrives and needs some auto repairs on their car, they are not able to observe the prices that other consumers are quoted. So there's a lack of observability there. And furthermore, they can't sort of say, I want to get the price that you're quoting to, say, a male consumer if I were to walk into a car repair shop. But that's a stark difference between the type of product markets that we're thinking of here in this domain of the pink tax, where if we think about that market for razors, this is a posted price market where there are arm's length transactions. Namely, when a consumer walks into a store, they can freely observe the prices of products targeted to both men and to women. And there's also not a bouncer in the drugstore saying, oh, Anna, you're a woman, you must buy the product that's targeted to women. You can't go and buy the product targeted to men. And in fact, empirically, we see that plenty of women do buy products targeted to men when they're shopping, for example, for their husband. So it seems like consumers are aware of the existence of products targeted to both genders. So because of the reason these distinctions between what we see with posted price markets and negotiated price markets, we think that the way that price discrimination might work in posted price markets, it might be harder to sustain that. Namely, if these were truly identical products, a pink razor and a blue razor that are identical in other attributes, then if firms were price discriminating and charging a higher price for the pink razor, this would open up an arbitrage opportunity, where female consumers could just walk into a store, pick up the blue razor instead, and check out at the lower price. So this led us to think, and motivated by economic theory, that really in order to sustain price discrimination in posted price markets like the ones that we're studying, successful price discrimination should require some degree of product differentiation, most likely. So this would be more akin to a form of second-degree price discrimination. Now, what that differentiation looks like, that could vary. On the one hand, differentiation could be enough as just varied color, blue versus pink. But there could also be differentiation in other attributes of the product as well, things like the scent of the product. We're going to be focusing in on personal care products, and I'll tell you more about that in a few minutes. But like the body wash or the shampoo, it could also be differentiated on even more functional type of attributes. And that's something that we want to explore as we dig into understanding the nature of price discrimination in the type of markets that this pink tax legislation is intended to address, is how does that price discrimination work, and does it seem to be supported by product differentiation? So that's the existing body of work that's analyzed gender-based price disparities in negotiated price markets. But we also wanted to understand, is there existing work that has looked at this in more of these posted price markets that we have in mind? And when we dug into the literature here, we found that the literature was much thinner. There were a few academic studies that were posted more in gender studies journals that were thinner on the empirics and maybe had some statistical power issues. And the main study that got the most attention was the study that was conducted by the New York City Department of Consumer Affairs. And this was a study that was actually cited in the National Pink Tax Repeal Act that was proposed and is also cited in the New York state legislation as the primary piece of empirical evidence to support the need for regulation in these types of markets. So let me tell you about what this New York City report does. What the researchers did is they went into a sample of drugstores located within New York City, and they identified pairs of products where there was one product targeted to women, what appeared to be a similar product targeted to men, and at a single point in time, they collected the prices of those two items. They actually carried out this data collection approach across a wide variety of categories that sell products targeted to both men and women. So they did this exercise in apparel. They did it in kids' toys, like picture a pink scooter and a blue scooter. They looked at home health products, like adult diapers, Depends, targeted to men and women. And they also looked at a bunch of personal care products, things like razors, body washes, et cetera. Then when they compared the prices between these pairs of products, in all those other non-personal care categories, they did not find any evidence of a systematic pink tax. But within the personal care categories, things like razors and body washes, they found that on average, the products targeted to women were 13% more expensive than the products targeted to men. And that is why, as I said, this is sort of the key piece of empirical evidence that's been used to motivate the regulations to ban this type of pricing practice. And that also helps explain why there's been a lot of emphasis put on price discrimination on the basis of gender within this category of personal care products. Now, as my co-authors and I looked at this study, we recognize that it's an important first data point on the extent to which firms are price discriminating on the basis of gender here. But we also felt that this study had some limitations. Namely, as I said, all of the data was collected only from drugstores within New York City, which we know New York is a highly unusual, atypical market. And they were looking at only one retail format as well. Furthermore, when we just looked at the set of products that they actually included in their study, those products only covered 6% of the personal care category. So there were a lot of top brands that were not included in their comparisons. So we think that the work is sort of hard to generalize given this small sample size and the selected nature of the sample. Furthermore, when we actually dug in and we looked at the pairs of products that this study were comparing, when we looked at the ingredients that were included in those pairs of products, we saw that those products actually tended to differ, including on the very top ingredients used to produce the product. But now, if we think back to how the regulation has defined substantial similarity and the body of products that the regulation would apply to, it applied to products that they consider to be similar in the sense that they use the same ingredients. And so our interpretation of the law is that the law actually would not apply to many of the pairs of products that were actually used in the comparison of this study, even though that study is actually what's being used to motivate the need for the legislation to begin with. So our broader take on this was more generalizable empirical evidence is needed to really get a better sense on the extent to which this practice of gender-based segmentation and pricing in personal care products, is this systematic? Is this something that warrants regulators' time and attention to go after? So with this high-level goal in mind, we're going to decompose this into a few different steps. The first step in our research is we wanted to understand and document the extent to which there is just segmentation on the basis of gender in the personal care categories. And further, once we understand the extent to which there's segmentation, we want to understand what helps support that segmentation. Do we see that the products targeted to men and women really are these identical variants that may only differ in terms of color? Or do we see that products targeted to men and women tend to be differentiated in other attributes as well? Next, we wanted to turn to understanding the types of prices that female and male consumers encounter when they go shopping for personal care products. And to do so, we compared the prices of gendered products in the personal care categories from retailers all across the US from 2015 to 2018. And in our analysis of prices, we're going to propose two different measures or types of price comparisons. The first price comparison that we propose to look at is what we refer to as the pink gap. And what the pink gap is intended to measure is if you were a female consumer that walked into a retail store, sort of what is the average price that you would encounter and how does that compare to the average price for men's products? So here, we're not going to be zooming in on substantially similar products, but it's more comparing, on average, how expensive are products targeted to women, on average, how expensive are products targeted to men. So that's what we coin as the pink gap. But then we also want to zoom in more on this more policy-relevant measure of the pink tax, where we're going to try to operationalize the proposed and enacted legislation's definition of substantial similarity and actually try to identify the products that would qualify as substantially similar and then determine the price differences within those substantially similar products. Okay, so I'll show you results on both of those price measures. And then finally, we conclude the paper with some discussion about implications for policy. All right, I will tell you now about the data that we use in our empirical study. So the primary data source that serves as the backbone and the key outcome variables for our study is Nielsen store scanner data that we obtained from the Kilt Center at University of Chicago, sorry. And the data that we analyzed comes from 2015 to 2018. We have data from almost 40,000 retail stores representing 93 different chains across the US, and we see stores of a variety of different formats. We see drugstores, convenience stores, grocery stores, and mass merchandisers as well. So from a generalizability perspective, we think that our data has a much wider lens compared to this New York City Department of Consumer Affairs report that was the key point of empirical evidence on this topic until our paper entered. Our key outcome of interest is going to be a measure of price, where we're going to explore price measured in two different ways. We'll look at both price per product as well as price per unit of measure. So when we look in the data, we actually see that products targeted to women tend to be smaller in size than products targeted to men. Like the same manufacturer producing deodorants, one targeted to men and women, the bottle for women tends to be smaller. And so making comparisons on a per product basis may not be the most apples to apples comparison. So we also look at comparisons on a per ounce or per count basis in the context of razors. Now that's going to be our primary data source, but in order to study our questions of interest, we have a few empirical challenges if that were the only data that we had. Namely, we have to be able to discern the gender target of the products in the sample and figure out, was this product being explicitly targeted to one gender, was it unisex, or was it not targeted on the basis of gender? And secondly, in order to get that, what we think is the policy-relevant quantification of the pink tax, we need to be able to determine what products in our sample are actually substantially similar. Where again, the legislation defines substantially similar, the national legislation, as products that are produced by the same manufacturer and are produced with similar materials, where color is not a meaningful differentiator. So how do we propose to address these empirical challenges and enhance the data that we have to work with? Well, on the first point about gender targeting, we pull in information from a variety of different sources to help build a variable that's going to tell us in our data, was this product targeted on the basis of gender, and if so, to which gender? Our first source of information on gender targeting comes from the Nielsen data itself. So we look at the categorizations in the Nielsen data. Like in some product categories, products are actually split as these are women's razors and these are men's razors. So we pull information from that. We also do some string searching of the product names. So a product like Lady Speed Stick, from that we would extract that this is a product that is being targeted to women. Another source of information for us on gender targeting comes from, we scraped the Walgreens.com website. So Walgreens actually assorts their products on their website according to gender, and you can filter on products targeted to women and products targeted to men. So we pulled those product tags and merged that onto the products in our data as well. Then we collected data from another market research firm called Label Insight. Label Insight has a database of products, and for a subset of the products in their data, they have a column that's populated telling us about the intended gender target for that product. So we bring that information in as well. Now, even though that gender variable wasn't populated for all of the products in our Nielsen data within Label Insights, we were able to obtain images of all the products that are in the Label Insights data. So we also hired a team of undergraduate RAs to code their perceptions of whether the products that they were looking at in these pictures were targeted on the basis of gender. We had multiple undergrads evaluate each product, and we only labeled a product as targeted if there was strong consistency across those labelers. And then our final source of information on gender targeting came from the Nielsen data as well, but a different set of data from Nielsen. For those of you who haven't worked with their data, they have a store scanner data, but they also have a home scan panel, where they have a panel of about 50,000 households in the US each year who record all the purchases that they make. And we see information about the household's demographics and makeup. We focus in on purchases made by single gender households, so households that only have exclusively women living in them, or households that only have exclusively men living in them. And we look to see whether there are products that are differentially purchased by households of only one gender. So if a product is almost exclusively purchased by only female households in our sample, we label that as a product that was targeted towards women, vice versa for men. We pool all this information together, and from this, we construct a single gender target variable from all these different data sources. Now, the second challenge that we needed to address was how are we going to identify these substantially similar products within the data set? So to address this issue, we collected data from yet another market research firm, this time a company called Syndigo. Syndigo has information on product manufacturers, so that's going to help us because part of the definition of substantial similarity is products produced by the same manufacturer. And then we also wanted to collect information on product ingredients to use as a proxy for this idea of are products produced with similar materials. And so we were able to collect information on both the active and the inactive ingredients for a lot of the products in our sample. All right, so now let me start to dig into the results on some of these questions that we wanted to tackle. So the first question that we wanted to start with was just to what extent are products in personal care categories actually targeted on the basis of gender? Is this sort of niche or is this a pervasive practice? So here I'm showing you, starting with sort of breaking it down by the different personal care categories that we look at. And the first column is reporting what is the share of sales volume of products in these categories that our sources labeled as gendered towards either men or women. And we see that on average across all of these categories, about 82% of sales volume for products sold within these personal care categories were for products that we labeled as targeted on the basis of gender. We also, however, see quite a bit of variation or heterogeneity across categories, where we see some categories with lower gendering, like in liquid hand soap, other categories with much higher prevalence of gendering, like deodorants. Now, the second column in this table is further decomposing this of within the products that are data labeled as targeted either towards men or women, what is the breakdown in terms of the share of sales of those products that were targeted to women? And we see, again, quite a bit of heterogeneity across categories, where we see in some categories it's kind of a 50-50 split. That's what we have in the deodorants category. But in other categories, that category skews more heavily towards primarily sales going towards products targeted to women or vice versa. So we see some heterogeneity here. Now, going forward in our empirical analyses, we're going to focus on a smaller subset of these categories, categories that have a minimum threshold of sales, and categories that weren't disproportionately skewed towards serving one gender or the other. The reason is we want to have sort of a meaningful representation of products that are targeted to both men and women within the categories that we focus on. OK, so we've thus far shown that it seems like segmentation on the basis of gender is highly pervasive in personal care categories. The next question that we wanted to understand was, how are firms doing this? Are they supporting this type of segmentation with product differentiation? That was our theory, was that in order to sustain successful price discrimination, that likely would require product differentiation in a way that it would encourage customers to sort into the product that was sort of intended for their group. So that's what we want to try to dig into, is to understand to what extent products are actually differentiated. But we recognize that differentiation could happen in different ways. You could have product differentiation more on functional attributes, like how the product performs. But you might have differentiation on other more cosmetic attributes, things like color, that don't fundamentally impact how the product performs, but there's sort of an appearance aspect to it. Now, because the legislation seems to deem those differentiation on color, a more cosmetic attribute, as irrelevant and say that that does not create meaningful differentiation and products of different colors are considered substantially similar, we really wanted to focus in on, OK, so to what extent are products differentiated on these more functional attributes? Because that's going to be important for us to understand and figure out what is the set of products that the legislation would consider to be substantially similar. So how are we going to identify differentiation on functional attributes like ingredients? Well, we define a product formulation in our data as the combination of a manufacturer and the top 5 ingredients. To give you some perspective, the average product in our data actually is produced with 18 ingredients. There's some difference across categories in sort of the average number of ingredients going into a product. But the reason why we chose to focus on defining a formulation as only similarity in the top 5 ingredients was we thought this was a fairly conservative approach, where it was looking for products that were produced using the same top materials, but it still allowed for some possibility that maybe an ingredient was used to dye the product a different color or to give it a different scent that might be one of these more cosmetic attributes. And we didn't want to consider products that had those differences as differentiated. We want to lump those together and say those are substantially similar. The way product ingredient lists are ranked is they're ranked from ingredients that are the most prevalent to the least prevalent. So picking off the top 5, we thought these are the ingredients that make up sort of the most important part of the product's composition. And we also show robustness in our analyses to using the top 3 ingredients to define a formulation instead of the top 5. All right, so now that we understand how we're going to basically operationalize this idea of substantially similar, it's going to be, do products have the same formulation, meaning the same manufacturer and the same top 5 ingredients? We wanted to dig in and understand, so how differentiated are products in the personal care categories that consumers are shopping in? So we have in mind this type of thought experiment. Imagine that you walk into a drugstore and you pick up a body wash that is targeted to women on the shelf. What is the probability that that body wash that you pick up is going to have a substantially similar analog targeted to men sitting on the shelf in the same retail store that you could substitute to? So how common is it for the same store manufacturer to be selling products with the same top ingredients that are prevalent in the same store? And what we find is that most products actually do not have a comparable formulation that is targeted to the opposite gender. So we see that there's some differences across category here, but broadly about 80% of the products in our sample, they do not have a substantially similar analog targeted to the opposite gender. Deodorants have a little bit more overlap in formulations. Hair coloring is actually really, really distinct. Hair dye, there were 0 products that had identical formulations of products targeted to men and products targeted to women. So thus far, what we've seen is there's extensive segmentation on the basis of gender, but it seems like a lot of that segmentation is actually supported through product differentiation in the top ingredients that are used to compose these products. And we want to recognize there might be other sources of differentiation as well on things like color and scent that are harder for us to measure, but we think it's important to establish that even on these more fundamental materials that are used to produce the products, that there does seem to be quite a lot of extensive differentiation. All right, so now let's get into the price comparisons, because this is really where the meat of the regulatory interest lies. And I told you in the introduction that we're going to look at 2 different types of quantifications of the differences in prices that male and female consumers encounter. Our first object of interest is what we referred to as the pink gaps. And this is really just intended to compare the average prices of products that a manufacturer sells to women versus the average price of products that a manufacturer sells to men. We're not going to be conditioning on products that are similar. We just want to know sort of that distribution of products that are out there in the market. How do they compare on prices? So we use a very simple OLS specification where we're going to analyze data at the product, manufacturer, store year level. And we're going to look for differences in average prices across products targeted to men and women, where we're going to sort of isolate those comparisons to be within manufacturer, within store, and within year using fixed effects. And I want to be clear that what's going to be captured by this term of the pink gap is this is going to capture both the fact that for identical products, firms might be charging different prices, but they may also be selling differentiated products to men and women that are produced with different ingredients that may have different costs that may map into different retail prices that consumers encounter in the store. So what do we find? Well, looking across the different personal care categories in our data, we have 9 categories represented at this point. And we see that in only 1 of those 9 categories are the personal care products targeted to women actually more expensive than the products targeted to men. So a positive bar means that the price of the products targeted to women is more expensive. A negative value means the products targeted to men are more expensive. So in only 1 of these 9 categories are products more expensive for women, and that estimate is statistically significant. However, this analysis is looking at the price per product. So this would be like the price per bottle of deodorant. But we also talked about how products targeted to women tend to be smaller. So you're getting fewer ounces in a bottle of deodorant that's targeted to women versus the ounces in a bottle of deodorant targeted to men. So to get a more what we thought was a more apples to apples comparison, we also look at this on a price per ounce basis. In the razor categories, we look at this on a price per count. So this would be like, what is the count of disposable razors in the bag or the count of refill blades? And here, we see a very different picture, where in 4 of the 9 personal care categories that we look at, the women's products are significantly more expensive, and in a few others, they're directionally more expensive. There's a couple categories where men's products look slightly more expensive, but those differences were not significant. So there's different ways of computing the average across categories. We report a few of them in our paper, but the simplest being just taking a simple average across these categories, we find that indeed it is true that the products targeted to women do tend to be on average 11% more expensive than products targeted to men. However, this is not, in our mind, the policy-relevant comparison. Because remember that this is admitting comparisons between products that are produced with different ingredients that we think would not fall under the purview of the regulation that, as written, would only apply to substantially similar products that are produced with similar materials. So that's where we're going next, where we're going to now do our best to quantify and estimate the pink tax as guided by the way the legislation has described this, where we're going to look for differences in average prices charged for products targeted to women versus men, looking within products that are produced with the same formulation, namely having the same manufacturer and the same top 5 ingredients. So these estimates that I'll show you in a second are going to reflect differences in prices among only substantially similar products. And what I'm showing in the graph is the blue bars are those same bars that we looked at on the previous slide where we were not conditioning on substantially similar products. Now I'm adding in the orange bars, which are the price comparisons for that category only within substantially similar formulations. And focusing on, I guess I should note, you see we have fewer categories represented up here as well. The reason being that for razors, we don't have ingredients. And for hair dyes, there was 0 overlapping formulations. So there was no way to quantify the price gap within substantially similar formulations. So here we have 5 categories. And we find that on a per ounce or per counts basis, women's products are actually only more expensive in 1 of the 5 personal care categories that we look at, namely in bar soaps. And in 3 of the 5 categories, when firms offer substantially similar analogs to men and women, we actually see that the variant that's targeted to men is slightly more expensive. That's the case in body washes, shampoos, and shaving creams. Now again, if we wanted to compute like a big average across all of these categories, the main headline number would be that women's products within substantially similar comparisons are only 0.1% more expensive. Basically, it's a wash. There's some categories where women's products are slightly more expensive, some categories where men's products are slightly more expensive, and on average, they're pretty similar. All right, so to kind of summarize our findings from this first paper, what we find is that gender segmentation is pervasive, and it seems to be supported by product differentiation, including on just the top ingredients that are used to manufacture these products. Overall, we do find that firms charge more for products that they target to women compared to products that they target to men. However, we also show that there's not that much overlap in the formulations that are used to produce products targeted to men and women. And when we zoom in on that narrower subset of products, kind of only like 20% of products that actually have this formulaic analog sold to both men and women, we find that among that narrower set of products, the data is not consistent with a systematic price premium for women's goods. In fact, it varies a little bit across categories, and on average, they face fairly similar prices for these similar products. So we think that our research has implications both for consumers from a welfare perspective as well as for regulators. On the consumer side, you may be wondering, well, what are the economic implications of this? You could imagine if a consumer were willing to switch to a product targeted to the opposite gender, but they wanted to maintain a product with the same formulation, there's very little gains to be had. Namely because it's quite rare for there to be a product sold targeted to the other gender that's produced with the same materials. And in the 20% of cases where it happens, those products tend to be priced very similarly. So there's not a whole lot to be gained if you are only willing to switch to products with those same top ingredients. However, if a consumer were willing to switch to products with a different formulation and switch to a product targeted to another gender, well, in that case, there could actually be substantial savings. You could reduce your personal care spending by up to 9%. However, how you interpret that from a welfare perspective sort of depends more on why you think people are making the choices that they are. If you think that people, say women, are buying the more expensive products that have different ingredients than the cheaper products that men's have because they value those ingredients and they value the function that those products provide, then actually convincing them to switch to a product with different ingredients, even because it's lower, like the revealed preference argument says that they preferred the more expensive, differentiated variant targeted to women. So it's not clear that this would actually be welfare enhancing if you could get everybody to switch to always buy whatever cheaper option is in the market. However, if you think that there's some sort of friction, that maybe people don't truly prefer the variant targeted to their own gender that's differentiated with these attributes, but maybe there's something like a gender norm or there's search costs and people are unaware of the existence of other attributes and they're just like sticky in buying the products that are targeted to their gender, this suggests that there could be room for welfare gains if consumers were willing to switch to products with different formulations. So that's how we think about the consumer side of things. In terms of our implications for regulators, our main suggestion is that the current conceptualization of the pink tax regulation we think is unlikely to be impactful, because we've shown that it applies to a fairly narrow set of products within these categories that actually have substantial similarities. And within that narrower set of products, we have shown that there are not very large, meaningful price differences that are cutting against female consumers. So that is sort of the main takeaways from this first paper. And because I think I have a couple of minutes left, maybe I'll quickly mention the fact that one of my co-authors, Sarah, and I now have an ongoing working paper where we're trying to dig more into one of these laws that has actually passed in New York, the law that went into effect in 2020, and to understand the implications of that law. Based off of our first paper, our hypothesis is that this law is not going to have a big impact because we don't think that the regulation is really going to bind. But we think it's important to actually quantify empirically what is going on. Maybe we will be proved wrong, and even if we're right, it's good to have empirical evidence behind that. So we're going to study the impact of this New York law that, again, prohibits price discrimination for substantially similar products. This law went into effect on September 30th, 2020. And our goal is to assess the impact of this law on a variety of different outcomes. First, we want to understand if it has an impact on retail prices. So when consumers walk into a retail store, do they see that prices adjust after this law goes into effect and bans this form of price discrimination? Second, we want to understand if the law has an impact on product assortments. You could imagine if there were a retailer that were actually violating this law and they were selling similar products with like a price premium for the women's good and they needed to comply with the law, one way they could comply would be adjust prices, but another way that they could comply would be to adjust their assortment. They could pull one of the similar analogs so that they don't have that overlapping formulation in their assortment. They could just like limit the size of their assortment, or they could replace that with a differentiated product. So we want to look at whether the size of the assortment varies, as well as whether the overlap in assortments between men's and women's products in retail stores vary. And finally, we want to understand if after this law is passed and enacted, do we see any changes in consumer purchase behavior? So why might consumers adjust their behavior? Well, if we do see movement in retail prices or assortments, then consumers are going to adjust to those shifts that they encounter in the retail environment. But it's also possible that even if retailers were broadly in compliance already, this regulation doesn't bind, and they don't really need to change their behavior. Prices and assortments don't change. It's possible that consumers could still adjust their behavior if this law and the media attention that it got kind of raises this information story where consumers become more informed about the fact that there are products targeted to another gender that in some cases may have similar attributes or they may be cheaper. And could that increased attention to the issue, we might see consumers actually switching their purchases more. So we want to understand if after the law we see consumers in New York are more likely to buy products targeted to the opposite gender compared to before the law. And our empirical approach for this is going to be a difference in differences paper where we'll compare changes in New York before and after the law to other states in the country to learn about whether there was that differential impact on New York consumers. Just to give you a very quick summary of the results, as we predicted from our first paper, we thus far have found limited evidence of an impact of this law on any of the outcomes that we have looked at, including retail prices, assortments, and consumer purchase behavior. So at this point, our main takeaway is that this sort of confirms our predictions that came out of our first paper that we wrote before these laws went into effect, suggesting that these laws don't really seem to have a lot of bite, and the main recommendation might be for policymakers to try to focus their efforts on legislation that might be more impactful in other areas. All right, thank you very much.
Thank you, Anna. I'm just going to stand up here, and we have the editor of the paper, Catherine Tucker, the senior editor of marketing science and the Sloan Distinguished Professor of Management at MIT Sloan. And we have a little video. She's going to talk about the paper for a few minutes, and I'll turn it back over to you, Anna.
Why being the senior editor on this paper was a complete pleasure is that it tackled a question that everyone just perceived was true. And this is the belief that most people have that women pay a lot more men for products when they are pink. And that might sound like a really strange thing, but I hear it all the time in the press from my students, the idea that there's a lot of gender-based pricing. Now, what is surprising is given the ubiquity of this belief that no academic has really tackled whether or not this belief empirically holds before. And that's why it was a true pleasure to get this paper, because I discovered all these new facts that I had no idea about. The first thing is that the authors were looking at the personal care category, and they discovered a huge amount of gendering in that category. And again, I'm no chemical scientist, but it is remarkable when you think about it, because in the end, men and women do both have similar hair follicles with similar chemical composition. And the amazing differences in gender of these different products are not chemically based. So that in itself is a really interesting fact that 80% of personal care products are indeed gendered. But even more fascinating was this finding, was the fact that though so many people believe that there is indeed a gender tax and that women pay more for personal care products, these authors discovered that this was not true. Indeed, it's true in just a few categories, perhaps marginally, and then even on average, it's actually not true. Men, I'm really sorry to tell you, if you're listening to this, you're actually on average paying more. And why is that? For whatever reason, male shampoo and conditioner are particularly expensive. And as a result, on average, men pay more because they buy a lot more of these products. And so all of these findings were truly fascinating, simply because they took on something we all thought was true and showed it wasn't actually like that, and presented really convincing evidence to make us question previously held belief. One of the reasons it was a pleasure to be a senior editor on this paper is that, again, you often hear about the idea of a gender tax. Some people often specify the idea of pink razors. And I just love being able to correct people and say, no, this is not empirically true. And so if you're ever teaching MBA students, let me just tell you, this is a wonderful paper to use to correct and challenge their preconceptions. Now, as you might imagine, this paper got a lot of publicity and press, again, because it was challenging a huge perception that people had. Now, the broader implication I like is this, is that gender is incredibly important when it comes to marketing. And so for so long, I think we've been distracted by the idea that there's some kind of gender tax and personal care products, when really that's not one of perhaps the world's most, when you think about the challenges for women, is that just a distraction? And I think what these authors have done is they've said, look, let's look at this held belief. We've shown it's not true. And as a result, my hope is that they have actually provoked or encouraged a whole new generation of scholars to actually think more carefully about how we think discrimination may be done in marketing, how we think segmentation may be done in a way which makes us feel uncomfortable or not, and actually look at that empirically. So that's where I was so excited to be the senior editor of this paper, and I just can't wait to see all the follow-up research.
So yeah, I'm happy to take any questions. Yes, Gregor.
Oh, you have a mic.
Jan.
Anna, I love that talk, very interesting. Over lunch, we had some discussion on gender issues too, and my conjecture was maybe it's rational. So I got one conjecture and a question. Relating to what the editor just said, if I followed it, she said it was interesting that it turns out that women pay less for shampoo than men. Right? I think
So
she said that.
here's where we have to be, yeah, I'm not exactly sure that her quote is exactly right. Here's where we have to be nuanced, right, is we saw that the prices of products targeted to women do tend to be more expensive. I don't remember the shampoo category specifically, but those are among differentiated products. And when we zoom in on the similar products, that's where the prices are more similar. Yeah.
So I was just wondering, could it be that this is just like a quantity discount effect, meaning I use very little shampoo, given I have no hair, and women use a lot of shampoo. So it seems that a quantity effect could kind of explain that. Second question, I thought it was interesting because see, in operations, when we talk about product differentiation, we do the same thing like, is it essential complexity that is different or cosmetic, meaning the cosmetic would not matter? Mm-hmm. And I'm not in marketing, but it seems to me that cosmetic often does matter. And so in cars, for example, the color of a car, the product is completely the same, but there's different prices for different colors. So could you not make an argument there's a clear preference among colors and a rational decision maker would charge accordingly?
I absolutely agree with you. So in our paper, we focus on differentiation on functional attributes guided by the legislation's specific writing that they do not consider color to be a meaningful differentiator. But I think my co-author Sarah and I we've talked about the car example specifically ourselves and recognize that color itself can bring utility to consumers. Like even in the razor category, not something that is as much a representation of who you are as a car, but even if you just look in your own bathroom, you may prefer to see something of a certain color than the orange color that my husband loves that I hate. And so taking a very explicit stance that color doesn't matter, I don't necessarily agree with, but the way that we focus here on ingredients was guided by the legislation's thinking on this. Yeah.
Excellent.
And on the quantity discounts, I mean, I think that there is a quantity discount going on. I'm not sure how to think about it as much on the use basis, but we do see that products targeted to men are larger, and it's like when we do the comparisons on a per ounce basis that it becomes the women's products really shoot up. So I think if anything, it looks like men's are getting the quantity discount in most categories.
Yeah, but there's a question not about per unit. How many units per year do you buy?
Yeah, we did look at this probably 5 years ago when we were conducting initial exploratory analysis on the data. So when we started out this paper, we were under the preconception that there was a pink tax. And we thought what the paper was going to be was about trying to unpack and explain the mechanisms that generated the pink tax. Was it driven by differences in costs? Was it a demand side story, differences in price elasticities, and firms were just price discriminating based off of that? And we thought as a starting point, we needed to just replicate and show evidence of this empirical phenomenon, and then we would go unpack it. And then obviously the paper took a very different turn when we found that our empirical analysis didn't really fundamentally support that conception to begin with. Yeah. Yes.
I guess I have the mic, so I get
please.
to go. I guess for me, the quantity discount actually cut the other way. I think if you adjust it for the fact that men buy big bottles and women buy small bottles, and big on average is more expensive, I think that would make your either women's prices even lower after the correction, or maybe you get what's the opposite of pink?
So all of the first set of results I showed was on a per product basis, where men's bottles are bigger, and there it looked like men's products were more expensive. Right. But once we converted it to, I don't know if this still works, but
imagine you add economies of scale is what I have in mind.
Yeah.
Would you then get that would still dampen your results more if maybe flip them? Like
So
on
I think
average-
our analysis is already taking into account these quantity discounts by looking on a per unit of measure basis, like mapping the price into a price per ounce. So that's reflecting the discount that men are getting and the lower price that they see on a per ounce basis. But
we can discuss that. But the question I had is, I guess, more like when I think about price differences that arise due to discrimination, I think back to Becker, it's sort of a failure of competition. So are there products, which product categories should we expect these things to see in? Like a priori, if there's just like a lot of producers, and sure, there's differentiation, but kind of fairly free entry, like a priori would kind of expect to find very little. Are there product categories in which we'd expect to find more? Did you sort of find anything there?
I mean, so you're focusing on like competition and differentiation across brands. I think my main takeaway from our analysis is that it seems to be a lot of sorting in terms of attributes and ingredients that are included in the products, and that's like a key driver of differentiation. So are there certain categories that we might think of being less differentiated and others that are more differentiated? Perhaps. We do see within the categories that are gendered, like shaving cream skews more towards catering towards men. Like 70% or something of sales volume is for men's products for shaving cream. Other categories are more balanced. Others skew more towards women. And I think in some of our results, we tried to understand whether it was like categories that had a higher share of men's products if we saw that they tended to sort of garner price premiums in one direction more so than the other, but I can't remember the relationships that we looked at with that.
I was just thinking something simpler, like within a category, how many producers do you have? Like if you have 3 producers, I can sort of see a pink or black tax. If I have 50 producers in shaving cream category, it's kind of hard for me to see, even with product differentiation.
Yeah, so we do have a table in the paper that reports the count of manufacturers that produce products, both the count that produce products to both men and women, and then the count if they only produce to one gender or the other. Sorry, it's weird presenting a published paper that it's been a few years since you worked on. I don't remember the main patterns there, but I'd be happy to chat about that more. We can pull up the paper and look at that. Yeah, Beverly.
So Mike, you alluded when you were talking about how this paper kind of originated to my question, which is really focusing on the differentiated products that use different ingredients and your finding of a pink gap. And it kind of gets to the question of, do they charge more? And how you measure that? You are focusing on the retail price. Mm-hmm. And I would be interested to know, what is the markup? So in other words, are they using ingredients that are more expensive and therefore that price can be justified? Or are they using ingredients that either cost the same or cost less? And that actually might also be suggestive of a different form of a pink tax.
Yeah, we were also interested in that, and initially we started our paper with like a deeper dive into the deodorants category, and for that category we did obtain some information on wholesale prices. We've never gotten information on like manufacturing costs, so if anybody has a hookup with a manufacturing firm that we could get that kind of information, but from that we were at least able to back out like retailer margins, and we were trying to look at comparisons in wholesale prices across products with different attributes. One issue we encountered was the wholesale price data that we had didn't have great coverage of the products that we had in our data, and so we were reticent to draw strong conclusions from those initial analyses, but we were certainly very interested in that. I can also point you towards, there's a working paper that's circulating by a couple of authors that were PhD students at the time that they wrote it at Berkeley. It's Barnes and Brownstein is the citation, and they are trying to now kind of get more into this decomposition of mechanisms of when we see differential pricing, how much of that is driven by costs and how much of that is driven by differences in demand elasticities. They also don't have great cost data, so it's more backing out from first order conditions assumptions about costs and inferring costs, but there's some work that's trying to dig deeper into that too. Yes, Ivy.
Thanks. This is fascinating. I'm struck by the idea that the hair dye is so differentiated by gender. Again, to your editor's point, like, our hair should be the same. Maybe there's something I'm missing. And it's sort of related to Beverly's point as well about the ingredients themselves. Like, do we know that is there a quality difference, or are men's products harsher or something like that?
Yeah, we also would love to be able to say something about how these ingredient differences map into differences in quality and or costs. Unfortunately, we're not really sure of the best way to try to measure that other than the choices that people make in terms of perceived quality of products that have certain attributes. For the specifics of the hair dye category, I'm not really sure why there was so little overlap. That category, I didn't really realize this, but there's the products have different components. And I think that in the products targeted to women, there tended to be 3 different steps that you would use. And the products targeted to men, it tended to be only a 2-step process. So I don't know why that is. If it's driven by differences in hair, more likely maybe it's a sense of how patient people are or something to actually use the product. I'm not sure. But that was just empirically what we found. Yeah. Yes, Tim.
So as a political scientist here listening, you've described the legislation, right, that's described, and you said, well, really, you'd expect the legislation to have no actual impact. And then I'm thinking to myself, that's perfect as a legislator, right? If it's I want legislation that I'm sure is not going to actually do anything, but will be a perfect pander on the issue. And so I thought about that, and well, I don't know, that's not a question really, so.
Yeah,
We'll just stop there.
I can't conclude for sure, but this was legislation signed by Governor Andrew Cuomo, who's the former governor of New York, who was himself dealing with some issues and scandals that had cropped up related to issues related to gender. So part of it but it originated in the state legislature, not from him himself.
I did have a follow-up question, because oftentimes people complain about this kind of regulation because even if it's not going to have a direct market impact, that it creates kind of various legal kinds of issues. Or I don't know, one of the things you might look at is there court challenges or somebody, filing lawsuits claiming that something could have distortions that occur that way.
Yeah, we actually filed some Freedom of Information Act requests exactly trying to get at have there been legal actions that have been brought against retailers or manufacturers. The government returned back that they could not find any evidence of cases that fell under our request. So it's one of these things where it's hard to prove a lack of existence, but at least based off of the way that we defined our FOIA request, we were told that there were not actually any legal actions that came back satisfying those criterion. So it seems like also it hasn't had much impact and bite in practice either. Yeah. Okay, wonderful. Well, thank you guys so much.
Thanks very much, Anna. And we will reconvene here at 3:20. We're getting...